Welcome, traders. My name is Adam, and let's get going for this week's weekly overview for the week commencing Monday, the 16th of January, 2023. So if I have a look at the economic calendar for the week ahead, the first thing I want to take note of is that the US is taking a holiday on the Monday. That is Martin Luther King Jr. Day. That does mean that the volume is going to be lower on Monday, and therefore the day might be very sluggish. Very little might happen. If we move across, the next day that for me is going to have the most news that I need to be aware of is going to be Wednesday. There is the Bank of Japan with their outlook report. There's a press conference. And of course, as you know, lately they've been tweaking the yen. So we need to know what's going to happen with regards to that. And that could create some extra volatility. Not only that, but coming out of both the UK and Europe, we've got CPI data year on year. And then of course, around about 1:30 in the afternoon out of the US, we've got core retail sales. We've got PPI, and we have also month-on-month retail sales. So there's just a lot of news in that day where I would expect big spikes, possibly big swings on prices all across the board. And then on the Thursday, we have the ECB publishing their accounts of their monetary policy meetings. We also have out of the US building permits. Is there going to be a housing market slowdown, production slowdown? What's the state of the recession there? We have initial jobless claims we need to be aware of. So that's a thing. Are people jobs being lost, cut back? The markets are very sensitive to that right now, and they're likely to be that way for another few months at the very least. And then we've got the Philadelphia Fed Manufacturing Index. So all of these are going to be things that the market is going to be hypersensitive to because they potentially give some indication as to how dire the recession is going to be, even though currently the evidence points to at least the US having a very soft landing with regards to recession, and actually in some parts of the UK as well as potentially Europe, it being predominantly white-collar jobs. There might be jobs available, but also cutbacks in certain areas. So it's going to be a little bit of an unknown. Something like this hasn't necessarily happened before. If we have a look at the charts, what do we see this coming week? For the main thing, we see a lot of potential good with trend opportunities for traders. All right, so euro dollar is looking really good and climbing, GBP dollar looking good, Kiwi dollar looking good, dollar yen trends to the downside also looking good. Euro Swissy is broken through parity. Is it going to find support there, or is it going to come back below that and ultimately find resistance on that level? If we have a look at gold and silver been looking really good, but a lot of these are now needing a pullback. They do need to have a daily retracement. So traders this week should be looking out for potential signs on that, say, 4-hour time frame. Are we going to be seeing signs of a retracement as part of the normal healthy trend? But we do need to have a pullback. It is overdue now. Whether it happens in the early part of the week or the middle part of the week or the later part of the week is unfortunately something we're just going to have to find out. Also, crude oils are starting to look nice and bullish there as well. We've got some other commodities looking good. So crude oils looking good, metals looking nice and bullish, currencies again, as I said, looking good. If we move across to the indices, global indices are looking really nice and bullish, but they are also due for a pullback. The best part for me, the most interesting stuff is seeing out of the UK and Europe, seeing the DAX, the French CAC, seeing the UK FTSE 100, all of those climbing and looking really strong and really healthy, but also they are going to need to have a retracement at some point, and it points to it being this week. It doesn't really matter when it is. The good way to see it is that those kinds of pullbacks provide traders with entry opportunities into the next leg up if that trend continues to the upside. If we have a look at some of the equities, some of the major equities, almost all of them have been looking nice and bullish. One of the ones I've been talking a lot about lately is Tesla. It's battling with a 125 level. It should be able to get a boost, especially if everything else is getting a boost. And interesting enough, of course, let's just have a quick talk about bonds. Bonds are struggling a little bit with resistance levels, but overall they're looking much healthier, especially Eurobond. And for me, the most interesting ones, of course, are cryptos, just because a lot of people talk about it, and it's really nice to see them getting a big solid boost. This isn't a surprise. We know they're very much tied together with equities. Everything else is getting a boost. Tech stocks are getting a boost. All of this is pretty good. It's not a bad thing. It's just that at some point we're going to have a daily pullback, and that is something that is potentially, I think, very likely to happen this week, and I just want to include that in my trading plan. And that's it from me. Overall, the trends are looking nice and healthy. Markets are looking nice and healthy. Only thing that could disrupt it would be some of that news that I spoke about in the beginning of this video. That's it. I want to wish you a fantastic week, and I look forward to seeing you in future videos.